Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, August 29th, and just a couple items here today. So, not a huge day because investors really kind of waiting for uh, basically, since Draghi's not showing up to the Jackson Hole event, basically they're going to wait for Bernanke's speech on Friday. Draghi was scheduled for Saturday, so that was going to be kind of an important day, but it looks like Friday will be more important as Draghi won't be there. But we do got some economic news releases scheduled for today, and we'll start off with the GDP revision for Q2. The first revision that came out was at 1.5%. They were forecasting at 1.7 for Q2, and it came in at forecast, so 1.7. So that was good. So people are kind of liking the economy. One analyst was kind of analyzing or kind of making it look like it's driving 17 miles an hour in a 55-mile-an-hour zone. So that's kind of how they're kind of viewing the economy at this point with this GDP, where it's at 1.7%. Next item is pending home sales index for July. So we had a negative number for June, and we kind of figured uh, actually just went up to 2.4% for July. So actually that was pretty good. They're kind of struggling. They're not really looking at the housing. They did look at the GDP because they're looking at the overall, the macro versus the micro, which would be the housing. This week it seems like, and like I said, they're looking mostly at what the Feds are going to say. Like Draghi is going to say what's going on in Europe, and then Bernanke is going to do over here. Yeah, so that's what they're kind of looking at. And later on today, about 11 o'clock Pacific Standard Time, we'll have the Fed Beige Book. This could be a market mover if there's any information in there that uh, that might be come out as a surprise to investors. So look for by 11 o'clock Pacific Standard Time or 2 o'clock East Coast time as to any big market swings or not. So we'll jump over the headline news, and there's really not much there today. Just basically, the stock market's up a little bit. It's very light trading. The Dow was up about 4 so far this morning, so not a whole lot going on there. It did start off lower, and then the GDP did kind of help it out a little bit so far this morning. Then we have, so we'll go ahead and just jump into the bond market. And as a result, we are kind of going downwards today. As we saw, we are up here kind of tapping into this double line, which is the ceiling. This is going to be a tough resistance here. We're pretty much at the top of our list here. As you saw the pullback here, and we do have opening gap lower. Right now we're down about 18 basis points, about a total of about 25 basis points from where we left off yesterday. So rates have worsened a little bit today as a result. So, but again, this could dramatically change depending on the beige book if there's any surprise or whatnot. But just be cautious. The rates we do have some room to go down. As I mentioned, we do have this big, huge opening gap at some point that will close. So that could, we could see a big drop there as well. All right, folks, thanks for stopping by. Thanks for watching. If you guys want to see these on a daily basis, have these emailed to you, please stop by mikesdailymarketreport.com, subscribe in the feed burner, and you'll be on a list to automatically have these emailed on a daily basis. Thanks again. I'll see you guys tomorrow. Have a wonderful day.